Hello, guys. Welcome to another exciting episode on the show, Control or Be Controlled podcast designed to help you start thinking differently and take control of your life. And I remain your host, Darlington. Today's guest is Mitch Abel, founder and CEO of Investment Current LLC. He retired in 2015 at age 62 and realized he hadn't saved enough for retirement and was worried he might outlive his income. He was so determined to change that situation, so he began studying investing and trading. Mitch, welcome to Control or Be Controlled.
Darlington, thank you so very much for having me on your podcast. I feel honored to be here.
All right, Mitch, I would also like you to introduce yourself to my audience.
Sure. Well, that was a wonderful introduction that you made for me. So I retired at age 62, and I felt like I was too young to retire. So I started going to mastermind groups, and one of the guys that I met during that mastermind meeting wanted to teach me how to do value investing. So I said sure, and his whole thing was to buy stocks on to buy shares of stocks at a discount and let them go up. And that's really what value investing is all about. He taught me how to evaluate companies and how to figure out what the right price was to pay for them and that sort of thing. And the problem was is that in late 2015 and 2016, there was no really bargains to be had on the market. So he also taught me how to do a very simple options trade called a credit spread. And I did that for 9 months, did very well. And then in the 10th month, or October of 2016, the market crash took me out of all four of my trades. I lost everything that I had made over the previous 9 months, and I lost some of my principal. And I had already looked over my shoulder at my portfolio and said, "Oh, I'm not going to have enough money to retire, to stay retired. I'm going to have to go back to work." And I thought to myself, well, there's got to be a better way. So I started going back to masterminds, and I found this group that was teaching how to do intraday trading. My portfolio at that time was about $400,000. And within 6 months of trying to learn intraday trading and pattern day trading, I lost $150,000. And I went crying to my partner, Diana, and I explained to her what happened. That was a third of our retirement program. She looked me square in the eye and she said, "Keep going." Um, I had joined a live trading room that was open from 9:30 in the morning till about noontime every day. And what I was doing is I was trying to follow the leader of this room. And but he wasn't telling me when he was getting in, where the stop losses were, where the physical targets were, what the price targets were, or any of that stuff. Hence, I lost $150,000. I I stopped going to the room, went back to the courses that I had paid for, and I started reviewing the courses for themes. And out of those themes, within 6 months, I had my $150,000 back that I had lost. Within 3 years, I made enough money that I never had to worry about money again. And now, 11 years, almost 11 years later, boom, I've developed a generational wealth program for my family and for my actually my grandchildren. What I found is that there are four pillars that are really important to learn when trading. One is education. education is one of the most important things. You have to understand the language of the market. You have to know how to do a chart analysis. You have to understand what candlesticks are saying to us and the war going on between the buyers and sellers in every single candlestick. You have to understand the patterns, bull flags, various triangle patterns, rising and falling wedges, head and shoulders patterns, consolidation. You you've got to just understand all of that stuff. And uh, I use various indicators that can help us identify support and resistance levels. And of course, there is much, much more, but I really don't have time to get into it during this podcast. Patience is a second um, pillar. And what I found is that most people do not have patience, and including myself, I didn't have any patience. I had to understand that winning and losing are both part of the game of trading. Learning to read the market language, chart patterns, price action, indicators, that takes patience to develop and to learn. Building the discipline to wait for the right trade rather than chasing a trade or chasing momentum. And then recognizing the market moves in three different directions: up, down, and sideways. The third pillar is really discipline. If you don't have discipline, patiently waiting for that trade to come to us, it's not going to work. You're going to lose probably 70 to 75% of the trades that you're in. And applying what I call a 10% rule, which means never risking more than 10% of your total portfolio on any single trade. That means if you have $2,000 to start with, you don't risk any more than $200. If you have $5,000, you don't risk any more than $500 on a single trade. Or if you have $10,000, you don't risk any more than $1,000 on a single trade. And by creating and following a personal trading, what I call a trade plan, which clearly outlines the plan that you have for trading and the trading rules, and how to psychologically and emotionally control those feelings that one gets while trading. And trading brings every feeling up to the top. You've got to treat trading as a business and not a pastime or gambling, and committing to a daily practice such as meditation, reviewing your trades at the end of the day, keeping a journal, all of those things. It takes about 6 months to a year to become consistent and master trading. The fourth element is emotional control. I already said that you feel every single motion that you ever want or ever could while you're trading. And managing the forces between fear and greed, or highs and lows, or elation and depression, often get in the way of a trader becoming um, successful trading the way that we trade. You want to avoid impulsive decisions driven by dopamine, excitement, or panic. And working with specialized trading, in some cases, our students go to a specialized trading psychologist. His name is Randy Howe. He's been voted the best psychologist in the United States for trading, to develop a structural emotional mastery program for yourself if you can't get your emotions under control yourself. And understanding that the technical side of trading is learnable, but self mastery is truly the competitive edge. And those are our four pillars. And whether you work with me or somebody else in this field, all these four pillars are really the most important aspects of trading that you ever want to master in order to be successful in this work. Darlington, do you have any questions for me?
Yeah, sure. I have a question for you.
Sure.
Okay. So most of my questions, yeah, I've been able to answer them though. So I don't.
Thank you.
So that's actually funny because I had some questions already, but when you started speaking, you covered a lot and a lot of my questions. So I'm just going to try to squeeze some of them in and
Okay.
see. Okay, so talking about trading, investing at the age of 62, did you think that you would have done better when you were young if you
Oh,
started trading and investing at a younger age?
you know, when I think back at my 40-year career in corporate America, which um, and compare that to today, I I
Yes.
thought to myself, yeah, I wish I would have known this stuff then. If I would have started out with a good financial background and financial freedom that I feel today, my life today would have been very different from the past 73 years that I've been alive. So learning to trade early on in your life is very important. We serve four different demographics. Um, and the first demographic are students that are coming out of high school or college that don't want to go into corporate America and work for a living. They're much more entrepreneurial. They don't have any money themselves, but somehow they've been able to convince their parents to provide them money to learn this skill. The second demographic are people that are from 25 to 45, and those people want to replace their corporate jobs with income, right? That they can replace their income and get away with not having to work anymore, all while building their portfolios. So they're looking to replace their income, build a portfolio, and eventually build generational wealth for themselves and their families. Then with the other demographic that we have is from 45 to 60, and they're coming up on retirement. They don't really understand, or they haven't really done a good job in most cases of planning for that retirement and saving for that retirement. So what they're looking to do is to build a retirement war chest over the next, 15 years, 20 years, so that they can retire comfortably and then, or get out of corporate America altogether. And then we have one last demographic, and those are people like myself who have retired, looked over their shoulders, decided that they didn't do a very good job of saving either, or they got tired of sitting on the couch for, days on end. And now they're looking to just add, maybe $1,000 or $2,000 a day to their retirement fund. But they're looking to do something with their time other than watching brain dead TV. And so those are the four demographics that we serve today. And oh my goodness, if I could have had this skill when I was 20 or 21 or 22 or 23 or even 25 and bring it forward, I'm not sure what I would be doing today. The reason why I started Investment Current is twofold. One is to change one person's life at a time, and the second one is to help them build generational wealth. We've had about 250 students come through my program. And of the 250 students, we've had a 30 to 35% success rate with those students because of them putting in the time to clearly understand and to work on themselves and within those four discipline areas. And that's really because trading is really 90% psychology and 10% uh, 10% technical analysis. Technical analysis is very easy to learn, but you have to overcome the emotional and discipline issues. I hope that answered your question, Darlington.
Yes, Mitch, that answers my questions. So, uh, for someone approaching retirement, how should they think differently about investing and generating income compared to someone who is just starting out?
Yeah. So when I first started, as I explained, I was looking at something called value investing and trading options on the side. Um, but value investing takes an awful lot of your time because you have to go through all of the company reports for the last 10 years, do a fundamental analysis of that company, figure out what their moat is, what event is driving down their stock price, and then figure out when you want to buy that company. Whereas day trading, what I do, I know exactly where I end up every single day. Whether I had wins or losses, I rest comfortably at night and sleep comfortably at night because I know where I end up. With value investing and swing trading and all those other types of ways of making money in the stock market, and every one of them are valid. What I have found for myself, and probably there's other people out there, probably some of your audience, that have invested in the market, and all of a sudden it takes a crash, and boom, you're out a bunch of money because you get scared and you close that at a loss. Well, in day trading, we look for opportunities that can take anywhere from 30 seconds to an hour of time trading. And there are 3 times a day, 2 times a day really that are better to trade than other times a day. And those times are from 9:30 till about 11:30, and from 3 o'clock to 4 o'clock in the afternoon. And so you're not giving up your entire day to trade. Maybe you do in the beginning, but after a while, you come to learn that there are 2 times a day to trade. Um, what and so I don't buy stock anymore. Well, I do in my trust that I have set up for my grandchildren, but that's all invested in basically one stock and about 40 bitcoins. Um, but I uh, I don't really invest in stock in my own portfolio. I just trade, and and what value investors look for is about a 23% return on capital per year. We do that typically in a trade or two per day. I hope I answered that question for you.
Yes, Mitch, thank you. So, if someone listening today wants to begin learning about trading, what's the first step they should take before risking a single dollar?
Yeah, so they should come into my live trading room. We have a 5-day free trial, and actually watch us trade and interact with our other students. We have a live trading room. There's a chat box, but we don't really use the chat. We have live interactions with myself and our students in the room. So they should consider doing that. They can find that on my website at investmentcurrent.com. The other thing that they should do is they should go to my resource hub and on the website and come to my reading list and start reading. And I don't care what book they start reading. We have lots of different books on with lots of different titles, and some of them is value investing, and some of it is day trading, and some of it is psychology. But we've labeled it all out and organized them in such a way that they'd be able to see that. I think reading and participating are two very, very good ways of learning, but I wouldn't recommend um, trying to learn how to read charts and interpret charts and learning the technical analysis um, and trying to build a trade plan with trading rules by themselves. They need someone to mentor them. That's what I do. Is I mentor um, anybody that wants to start trading um, and invest in themselves. And they should just continue to read, watch videos, see what's going on out there, and participate in some live trading rooms. I hope that answered your question.
All right. Thank you so much, Mitch. Thank you. I wanted to ask you how listeners can connect with you, but thank you for pointing that out as well. Thank you for sharing a remarkable journey from devastating financial losses to helping others build confidence, discipline, and financial independence. So, I would like to ask you before you go, what is one financial mistake that you feel you should never have made?
Well, I've had lots of mistakes during my life. um, Chasing trades is never a good idea. If you miss a trade, look for a new entry area before getting into that trade. But don't chase the trade. It's a good way to lose your pot of gold.
Okay, thank you so much. I definitely will have that in the back of my head. Thank you once again for coming, and thanks to all my listeners for taking out their time to be with us
Yeah.
today. And do
Can I
have
tell
a
can I tell people how to get in touch with me?
yes, yes.
Okay. The best way to get in touch with me is to email me at Mitch at investmentcurrent.com. And if you want to set up a one-on-one meeting with me, um, find my calendar or send me an email and I'll send you my calendar list, my calendar link, and you can set up a convenient appointment for us to speak one-on-one. And I'd be happy to do that.
Okay, thank you so much, Mitch, and do have a wonderful day ahead.
Thank you very much, darling.